What safeguards and parameters do you think need to put in place to ensure AI is used responsibly within financial services?
That is incredibly dangerous where you're releasing so much code at once.
What role is AI going to play in Starling's journey today and moving forward?
AI isn't magic. It is a tool. Whenever I see someone running around and going, "Are you AI ready? How are you going to use AI?" I replace the word AI with the word screwdriver. If you had a massive conference entitled, "Is your bank screwdriver ready? How are you going to use screwdrivers?" We'd all laugh at that.
This episode, the secret to building banks that won't break. In this episode, I sit down with Jason Maude, Chief Technology Advocate at Starling Bank. We dive into how Starling is shaking up traditional banking with cutting-edge technology, the unique approach to risk management, and why AI is not a magic wand for transforming the financial world. Curious? Well, let's get started. So Jason, welcome to the podcast. I guess my first question is, and it's got nothing to do with AI, I just want to kind of talk a little bit about Starling to start, because Starling's a fascinating example of a bank and a business in the UK. I've worked in financial services, right? And so I've worked in kind of legacy banking. So what is it that Starling have done differently to all the other banks that are kind of out there, all the traditional banks, from a technology perspective?
Sure. From a technology perspective, what we've done differently is we've taken a look at the best in class, I suppose you could call it, or best in field technology practices. And by that, I don't mean best in field from the financial sector. I mean best in, the world. How do people create software very quickly and at the same time reliably, right? Because obviously being a bank, we need to focus on reliability. And what we've come to realize is that one of the key principles we've come to realize about developing software is that actually, if you want to minimize risk, right? And banks are always thinking about risk and how to manage it and so on. If you want to manage risk successfully in the technology change space, the correct solution is not to do one release of code every 3 months, 6 months, or what have you. It's to do lots of releases of code all the time. So Starling Bank does dozens of releases of code every day. We're constantly changing our code and that sort of thing. Now, you might think, well, doesn't that present many more opportunities to trip up? The answer is yes, but each individual trip up is likely to have a very small impact. And it's much easier to create a stable and reliable system where you're dealing with lots of little potential small trip ups than one massive catastrophe every so often, right? It's much harder to prevent those if that's how your system is created.
And we saw that a few years ago, right? When one of the high street banks released a software release and it crashed pretty much all the cash points for that bank and made withdrawing cash and making transactions impossible. I mean, that's on the scale of bad things to happen to a bank. That's probably about as bad as it's going to get.
One of the interesting things that came out of, I don't know if it was specifically that one, but, another similar big bank IT disaster was that a few days beforehand, one of the people involved with creating this mega IT patch that they were creating boasted that they were releasing 2,500 man years worth of work. Now, if I had heard that as an engineer, I would be on the next boat to somewhere outside the country to avoid the massive fallout, right? That is incredibly dangerous where you're releasing so much code at once. Because not only do you have just a sheer volume of code with loads of different things that could go wrong in it, you also have the possibility that you have two different things that could work perfectly fine independently, but that don't work together. And, the chances of that happening multiplies up very quickly, the more code you release. Doing these big releases is a problem, but doing lots of little ones is much, the risk profile is much easier to control.
Yeah, it's a really interesting way of looking at it. And you're completely right. I worked for a bank where we tried to unpick one specific system and we effectively, pulled that system out, and we didn't realize that there were multiple other systems that had dependencies on that. And it wasn't until that system wasn't there anymore that everything else that was relying on it died. And the question was, oh, damn. So we can't actually unpick one from the other. It's fascinating. And of course, the other thing with Starling, and we'll move on to AI and banking, but I think Starling's such an interesting business to talk about. The other thing is you built your platform from scratch, and you built it as a platform that can be effectively white labeled and repackaged in different territories, countries, depending on regulation. What was the thought process behind that? Because in terms of banking, that's a really innovative way of looking at something, right?
Yeah, absolutely. I mean, it was an evolving one, right? We started out not, not planning world domination, but planning, let's make banking better in the UK and let's create our own banking platform that allows us to do that. And a lot of the thinking behind that was, in order to change things, we need to have control of the banking platform, right? We can't, all of the changes that Starling has helped create within the banking industry as a whole couldn't have been done if we were beholden to someone else. Mainly because being beholden to someone else means that, well, they're in control, and the way of thinking about, banking and how you wrote banking IT back when we started was very, very stilted. Like the idea of presenting your customers with more data or more ways to interact with their bank account just wasn't a thing before Starling Bank and other similar digital banks came along, right? So ideas like being able to freeze your card rather than cancel it, being able to divide your account up into different pots, and all of these sort of things which we now merrily see the big high street banks copying on their banking apps and banking portals. All of those things we couldn't have created if we had tied ourselves into someone else producing the banking platform. So we needed to produce it ourselves. And once we produced it, then the question is, well, wouldn't other people like to use this, right? Isn't this is a great core banking platform that we've created and has that inbuilt reliability that we need in order to run a banking platform, and that anyone needs, and inbuilt resilience as well. So let's go and sell that elsewhere, and that's what we've started doing through Engine.
And I guess in a way it's a smart play, because dealing with different countries and different legislations for launching a bank, and we've seen that with banks in the UK, like banks like Revolut, that have struggled to get banking licenses for many years. So saying, oh, we're going to go to Portugal and we're going to launch a bank over there is actually quite hard, because you've got to understand the regulation, you've got to understand the challenges, you've got to be able to kind of engage with regulators on a local level, which is a lot harder. But a business over there that's involved in financial services is actually, we want to release a bank or create a bank, are already tied into those. So you kind of get the advantages of having that bank, but without all the legislative hurdles that come along. And that's never the fun part of doing anything, is it?
I mean, it's always, let's say, challenging to make sure that you are complying with what the regulators want for the banking industry in their country and the customers in their country as well. Necessary, but a challenge. But you're right that we can then, if we pick Portugal as a random example, we could, for example, help leverage the knowledge that the existing bank, or people working in banking have of Portugal and its regulatory frameworks and so on, without knowing ourselves. But the underlying technical requirements are going to be the same across the board. Everyone wants a resilient platform. Everyone wants a reliable platform. Everyone wants a platform that doesn't miss any payments. Everyone wants a platform that can catch itself up again if it fails in a if there's a failure, which inevitably there will be. Can the platform catch itself up again without too much fuss and too much disruption, right? These things are universal, no matter what the exact regulatory framework is. And that's what the sort of experience that we can provide.
And the other thing I liked about Starling is you didn't jump in with everything all at once straight away. So you took time to launch savings accounts. You took time to launch and go into other areas. And even on the business lending front, you weren't first to market for that, but you kind of evolved with that. And I'm assuming that the overall strategy of the bank will eventually be to move into other lending products and other lending areas. But certainly, you've never kind of rushed to do the next thing, and it feels very deliberate. Where some other banks kind of sometimes feel like, oh, and now we do this, oh, and now we do this, now we do this. It's kind of banking was your core product when you started out, and you've kind of built onto that very gradually, but very sensibly.
Yeah, absolutely. I mean, pragmatism is a big thing at Starling Bank, and another one of our key technological principles, right? That we'll approach things in a pragmatic way, and this, rather than just aiming for strict growth without caring about anything around it, we want sustainable growth, and growth that will actually allow us to flourish as a business and will allow our customers to, keep using our product and present them with the reliability and stability that they need. So, that pragmatism and making sure that we're always sitting there and going, well, what's practical now, rather than just running all over the place and creating whole loads of new products, which we might not be able to support or deal with correctly, is one of our key principles that we have to keep in mind at all times.
And I guess that pragmatism kind of brings us round to AI, right? Like does that pragmatism factor into the way you're looking at AI in banking? And I guess kind of, what role is AI going to play in Starling's journey today and moving forward?
Absolutely. So AI is a fascinating new tool that we can use for many different applications. But I use the word tool deliberately, that we have to, concentrate on this word and make sure that we always remind ourselves that AI isn't magic. It is a tool. It's a complicated tool. It's a difficult tool, right? It's more of a, let's say, industrial lathe rather than a hammer. But, it's a tool nonetheless. And you have to make sure you avoid falling into the hype of using this, right? Whenever I see someone running around and going, are you AI ready? How are you going to use AI? Is AI going to transform everything? I replace the word AI with the word screwdriver, right? So, I sit there and go, if you had a massive conference entitled, is your bank screwdriver ready? How are you going to use screwdrivers, right? We'd all laugh at that, right? We'd all find that funny, because it's like, well, we use screwdrivers when it's appropriate to use them, right? And the same thing has to be true about AI, right? You have to, rather than going, how do we use AI, right? You instead go, well, what is our problem that we're trying to solve? And is AI an appropriate tool to help us solve that problem? And in many cases, the answer will be no, right? I once had someone ask me at a conference, is AI, is every business going to be forced to use AI? And my answer was, well, I'm sure my coffee shop down the road will proceed just fine without it, right? You don't always need AI. But if you're in a business which deals with a huge amount of data and processing a huge amount of data, then AI-like systems, either like from the sort of very simple machine taught statistical modeling type systems, all the way up to more complicated things like predictive and generative AI and, LLMs and so on, are going to become more and more useful tools that will start transforming things.
I love that screwdriver analogy. I think that's really interesting, because you're right. The assumption is that AI is going to solve everything for everyone all the time, and actually, it's not true. In accountancy, I often say to people, it's great that you're interested in AI, but you're still using legacy desktop software and servers in the corner of your room, and AI is not going to help you in that regard, because you can't use AI on that kind of technology. I guess when people think AI in financial services, one of the first things that they'll focus down on is the risk and the potential risk of that. Because, let's be honest, in the UK, historically, some of our financial services organizations haven't covered themselves in glory in terms of kind of like, and I'm thinking specifically around 2008. So there's still a lot of reticence and kind of, I guess, fear around how financial services operate in this country, even many, many years later. So kind of what safeguards and parameters do you think need to put in place to ensure AI is used responsibly within financial services? And I guess the counter to that is, do you think there needs to be safeguards?
Oh, undoubtedly, any technology, any tool is going to require some safeguards around it to use it safely, and AI is no exception to that. So a lot of the tools and safeguards that you need around AI are going to be exactly the same ones that you need around any software, right? You need to make sure that you know what you're releasing, what you're changing, when you're changing it, why you're changing it, who's reviewed it, and so on, right? And you need to develop all of the same good practices that you have for releasing software. You need to apply those to AI as well, right? And indeed data, which is the other big component of AI. You need to make sure that your data is stored correctly, that it's of good quality, that you're complying with principles, as set out in GDPR and other relevant regulations, right? All of that needs to be done. So putting all of that in place will get you most of the way there, actually. I think that AI layers a few additional problems on top that you have to concentrate on, though. And these additional problems relate to, well, they're slightly different for different use cases, but they relate to a lot of them relate to the sort of how you explain what AI is doing, right? How you know what it is doing. If you've got something that's very deterministic, right, where, you put an answer in, you put some parameters in and you get an answer out, rather. If it's always the same, right, you can explain why set of parameters A, B, C leads to answer X, right? That's very simple. With the more complicated you make your AI system, the more difficult it becomes to explain why putting in ABC leads to answer X, right? But you have to still be able to do that. You can't, turn responsibility over to the AI because the AI can't take responsibility for providing answer X. So you have to be able to answer why, both individually and in aggregate, you are producing particular answers, right? You have to be able to give that answer to people. So explainability is a big thing. You also have to be wary about how not only on an individual basis, but on an aggregate basis, how your AI is performing and what it's doing. So it is possible for AI to go to go wrong faster than other things, right? Because you can get sudden switches where, because of the way that data is being put in, because of the way that the model is being trained, the AI's performance suddenly degrades, goes off in the wrong direction, right? Far faster than normal. So you have to monitor your systems, your AI-based systems, to work out if it's doing the correct thing, right? So that you can get those warning signs early. And that, again, speaks to this much more continuous interaction with the systems than some people are used to, rather than that sort of like, once every 3 months we check it type of thing. You have to go into the sort of like continuous monitoring. And then when we see a problem, when we see it deviate outside certain norms, then we step in and ask questions about the model and whether we need to retrain it and so on. So those are, there are several other problems depending on your use case, but those are a couple of the larger ones that you have to concentrate on.
That's really interesting. And in terms of looking at kind of in general with AI and kind of in Starling Bank, I guess let's start with Starling Bank. So what are some of the broad ideas or concepts that Starling are looking at in terms of AI? I mean, I'm going to assume that, when you think of things like customer success and kind of customer support, those are always some of the first places you're going to implement AI on that customer side, because it's quite an easy, well-trodden path. But so I'm assuming Starling may have already looked at something like that.
Actually, no. So
interesting.
Yeah, so I actually disagree with this. I think that this is a false path that people people are going down. So a lot of the time when people think about implementing AI, in terms of interacting with customers, they'll think of things like chatbots, right? We have a chatbot that people interact with and ask questions to. Now, the problem with that is that a lot of the time when people are trying to work out, how do I, when people are contacting a company, when they're, asking a question of someone, and they want to interact with your customer service agents, part of what they're looking for is the answer, right? Just the factual question that they're being, they're trying to answer the question or sort out a problem. They want the solution. But also they're looking for emotional help. They're looking for someone to help take on the emotional load that they're feeling. Their bank account isn't working, they're having a bad day, something's gone wrong and they can't fix it. They are looking for someone to provide sort of emotional reassurance that, they're feeling the right thing. They won't state that explicitly, but that is what they're looking for. The problem is chatbots can't provide that, right? And actually that makes, that can get people more frustrated if they're trying to answer a question and the machine isn't answering them, right? And this is a big thing especially when you're in a situation where you have no physical presence, like Starling Bank. That's the thing we really have to concentrate on. This is why we have a 24/7 call center staffed by humans who you can chat with or talk to. That is, I think, one of the less good places to implement chatbots. And I think a lot of it, my own personal opinion is that a lot of it is driven by the sort of assumption that the jobs that AI will help or replace are going to be the ones, that are, the lowest paid. Again, like every technological revolution, right? So people go, well, it must be call centers that's going to be replaced. I actually think that AI is different. AI can't deal with that sort of emotional aspect that call centers are often there to help. So that's a long way of saying that actually I think there are different areas which we should be looking at, and that chatbots and call centers is not going to be as productive a place to implement these things as some might hope.
And actually, I completely agree with you on that. I think that, in fact, that's one of the reasons I'm a customer of Starling Bank, is that 99.9% of the time, I don't need to speak to anyone, but that 1% of the time I do, I know I can phone, I can speak to a human being. They are generally knowledgeable and understanding and empathetic to the problem. And I think you're completely right that you can always tell when anytime I go to a chatbot, the first thing I do is, can I speak to an agent? Like, I try to just bypass the whole, because I know that you're going to go down a set of questions, and at the end of it, you're going to get frustrated and go, I just want to speak to a human being. Apple are pretty good at this as well, where they generally will funnel you down to some articles, but it's always quite easy to speak to someone or get engaged with someone. And, that is one of the reasons why I'm a big fan of their business and Starling as well. Interesting. So in terms of kind of, one of the things I want to talk about quickly is data. So one of the things that we see in accounting is the fragmentation of data, and it could be across multiple different systems, across multiple different technologies that don't talk to each other. So therefore, kind of properly utilizing AI to drive outcome from that data is hard. What's your opinion of how critical data standardization is around the adoption of AI technologies?
I mean, I would say it's critical, but I would go further than that and actually say it's critical even if you don't want to adopt AI technologies, right? I think that there is a massive problem in the finance industry in general with this data fragmentation. Right? It's one of Starling Bank's massive advantages in the finance market is we don't have data fragmentation, or we don't have it to anywhere near the same extent, because we have built a unified platform where data is siloed into buckets depending on use case, but it's easily transferable between the silos, and there is always a identified golden source for the data, right? Those two principles are very important. So this is not a thing that we see in other places, right? In other financial institutions, especially those which have undergone a lot of M&A activity where they've merged or acquired other companies, they end up in a situation where they have umpteen different databases, and they're not really sure, they don't talk to each other, and they're not really sure which the golden source is for any particular piece of customer data. So you end up in this situation where you can have three different systems, each of which stores customer data, some of which might have the same customer replicated on them, either twice or three times, and with different information. How do you keep it all up to date? And that, is bad from a data, the standpoint of someone who is supposed to be responsible for data and is supposed to have, good data practices. That's bad, even if you don't want to implement AI, right? Even before that, you're in a problem. But for implementing AI, you absolutely need this, because it's going to be, a nightmare to try and work out, if you have three different sets of customer information, which one is the correct one, especially since feeding them, the different set of information about each customer could produce different answers if the information isn't consistent.
And actually, I can speak around that data fragmentation piece. I was, at my time in banking, we saw, even within the same bank that hadn't necessarily acquired lots, but because of the way that different departments and different units were segmented, often you'd end up getting data into the system, and you're like, but that data exists over here on that system, but it doesn't exist here. So we now need to replicate it so that person can have a personal and a business account, but the two sides don't work together. Yeah. And it's insane that you think and you're right, that fragmentation is one of the reasons why NatWest never managed to hive off the Williams and Glynn project, was partly down to that fragmentation and connectivity of data. Too many different systems that held too many different things that were too interdependent on each other. Ultimately, they couldn't pull them apart. And that caused no end of problems. I guess it's fascinating that the kind of, ultimately, I'm getting from our conversation that your take around AI is that AI is going to be a tool to improve what Starling does as a bank, but it's not going to be the raison d'etre of Starling as a bank moving forward.
No, not really. I mean, we're not in the, if we were a company that sold AI solutions, then it obviously would be, but then we would be less like a bank and more like a company that sold screwdrivers, right? A company that sells screwdrivers is obviously going to be very interested in the makeup of screwdrivers. But when it comes to, and there will be companies whose whole deal is, their business model is selling AI, right? They'll create AI based solutions and sell them, and that's fine. Starling will just use it as another tool in our arsenal of tools needed to create and run our banking systems.
So I guess two points on that. First point is, so what we're effectively saying is, if there is a financial organization out there that is leveraging highly that it's an AI-driven, AI-first, AI financial organization, it might mean that underneath that their core systems might not be the most to shout about. You don't have to comment on that. That's a personal opinion. And I think that's an interesting take, right? And I actually can't remember what my second point was because I got so excited about the first one. But that happens sometimes.
I would say on that first point, while you try and remember your second, the first point, any company, any finance services company, or indeed any company that isn't trying to sell AI, but is just boasting, we use AI, we've got AI in our name, brilliant. Within a couple of years, AI will have been dropped from their name, and instead quantum will be in their name instead, and they'll be going, we're quantum now, quantum computing. And after that, they'll drop that and go on to whatever the next fad is after that, right? People will always, insert fad words into their company name in order to get a boost in stock price, right? That's a typical thing. I'm surprised that my bakery down the road isn't called Mrs. Smith's Buns Blockchain AI Quantum.
It did good on the search engine optimization. I remember what my other point was now. So Would you say that as it stands today then, would open banking still be a more significant technology to banking and finance than AI?
Sorry, would what? I missed the...
So would open banking be a more significant advancement in financial services than maybe AI has been?
I think open banking has issues around it as well. I think actually in the end, AI will be more significant. Like, don't get me wrong, I'm not saying AI isn't going to be significant. It's going to, provide a whole lot of additional tools that we can implement. It's just a lot of them will be helping to make efficiencies, helping to run things better, rather than a complete transformation of everything that's happening. AI might be transformative in some sectors, but I don't think that it particularly will in banking. It won't be transformational. It will be efficiency gains. I think open banking itself has some issues. I haven't actually seen enough of the benefit from it yet in order to truly declare that it is fantastic, great. Initially, it was created as a way of helping competition, right? It was initially created with that sort of competition mindset. It was created as a way of trying to reduce the market share of the bigger banks and increase market share of smaller players. It didn't really do that. It's now decided to transition into being a new type of payment rail, but there it's got problems because there's all the questions about, well, how do you implement fraud protection and how do you implement anti-money laundering practices and right? And all of these sort of questions which other payment rails, such as the card payment rails, have to answer, are now coming for open banking as well. I'm not sure whether they've managed to, answer those satisfactorily yet. They're on a journey, but we shall see where they go with it.
Absolutely. So my final question, and I guess this is where you get to put on your or get your crystal ball out and wave your magic wand. What do you see the long-term trends around financial services and AI, and what significant impact do you think that could have?
Yeah. As a wise man once said, predictions are very difficult, especially about the future. Take this with so I think the important thing about AI is that despite all my warnings to dampen down the hype and that sort of thing, AI is going to be very significant in terms of maybe not, as I said, maybe not revolutionary, but it is definitely going to be evolutionary. It's definitely going to move us forward and be a tool to move us forward. I think that there will be many AI systems will start cropping up in banks, either made by the banks themselves or more likely as the technology gets more complicated, provided by specialist services, technology companies that know about AI and that sort of thing. There will be banks like Starling which create a lot of their own systems in-house because we have the technological competency to do so. But, I think that for a lot of the outside world, it'll be, bought in. But nevertheless, it will be, it will change things. It will be, tools that people can use in very many areas, whether it be fraud, whether it be, if not, presenting to the customer services externally, maybe used by the customer services internally to, transcribe and summarize customer conversations, for example. It, could be used to develop new models of predicting credit and working out what lending patterns could be adopted and so on and so on. So there are there's a lot of different ways in which it could help. It could make things more efficient, make things better. But there are a couple of key risks and problems, as I've highlighted, that need to be examined before we start using it in anger.
Jason, look, that's a fascinating conversation. Thank you so much for your time.
Thank you for having me.
You've been listening to the Silver Linings podcast, which was written and produced by me, Phil Hopton, and Lara Bolsonaro. The podcast is edited by Lee Stallard and Nomad Video. If you'd like to find out more about Silverfin, you can visit us at silverfin.co.uk or check us out on LinkedIn.